Hello guys, here with you Anna Tutova, co-founder of Coinstelegram, and our guest Alston Zecha, who is partner at ATARI, a VC fund which manages $11 billion and active across Europe, US, and Asia, and invests into tech, healthcare, and fintech startups. And they are backed as well by Fidelity, and they are active as well in blockchain and crypto too. Great to have you here today, Alston.
Really good to be here with you, Anna. Thank you very much for inviting me.
So can you tell us about your background and how did you generally got involved into VC world?
Sure. So I come from a family of entrepreneurs. My father is an entrepreneur, my brother is an entrepreneur, and my uncle. And so I always thought that I would be an entrepreneur myself. I have been the co-founder of startups twice, in my life. Once was during the dot-com bubble in 2000, 2001. And then I was co-founder of a mobile payment startup between 2011 and 2015, 16. And after we exited that business the second time, I thought to myself, what do I enjoy most? And I enjoy being part of the ecosystem, but maybe I didn't have another idea. Maybe I wanted to share some of my lessons being on the side of the founder. A combination of both factors. And so when I was invited to join the 8 Roads team, I was very happy to do so. And that brings me to today, I guess.
So how is it different for you now from being the founder now to investing into other startups? What advices do you give to other startups, and how does your experience being a founder helps you?
Yeah, I think it's an interesting one because there are many successful VCs who may not have been a founder, and they are very good VCs as well. I think for the most part, the job of VC actually is different from being a founder. But I think the one thing about being a VC, a good VC, is that wherever you get your knowledge and your experience and advice to share with your portfolio companies, you have to have a good base and foundation. And for me, the experience of having been a founder, really, there's two things which I try to bring when I work with companies. The first one is empathy. So, understanding that the journey of building a successful startup is a long and sometimes difficult one. And so just trying to have that right level of empathy. And secondly, trying to think hard about what is the advice and the ways to be helpful at the right time. Because the analogy I use is like a person growing up. There's no point telling a teenager about what their life will be like when they are 40, just like it's too late to tell a teenager about the mistakes that maybe they made when they were a little child. If you draw that analogy with a startup and a scale-up, you also have to be very situationally aware about the advice that you're going to give. And so those are probably the two biggest things when I reflect on my journey and how best I try to be helpful with my portfolio companies.
Yeah, that's great. And as well, particularly in 8 Roads, you invested into a couple of blockchain-related companies like Fireblocks and Skaker. Do you invest as well into crypto on personal side?
So in the early days, I did buy a little bit of crypto specifically just to, see what it was about. I definitely sold too soon. This was in the 2014, 2015 timeframe. But look, I think the way we invest and the way we operate, you mentioned Fireblocks, you mentioned Kaiko. At our heart, actually, we are mostly doing the B2B investments. And where we're strong is thinking about software and thinking about, infrastructure and how tech as a whole can do things better. And so we're much more focused at that end of the equation in general in the investments that we make. And so in a similar way, that's how we bring that lens to the world of digital assets as well. So obviously we recognize that it's a big and overall vibrant sector. You also have to recognize what you're not so good at. And what we're not so good at is speculating or timing, the different cycles about the value of tokens and so on. And so that's why we focus much more at the sort of the infrastructure and supporting technology related to digital assets and crypto.
Yeah, so generally, when did ATARI invested into first blockchain related company? Because Fidelity has been quite active in crypto since, I guess, 2014.
That's right. So within our wider global platform, I think some of our first investments in the crypto space took place in 2013, 2014. And I supported a couple of investments made by our colleagues in other geographies in the 2015, 2016 timeframe when I first joined the organization. And I also worked together with some people at Fidelity in the 2015, 2016 timeframe as we were collectively figuring out what should the strategy be. So at the time, we invested in companies like TradeBlock and another business called Axia. And so we did make some investments back in the day. But in terms of our European team, we invested in, I think it was either the first round or maybe it was the second round of funding for Fireblocks. So was that in the 2017, 2018 timeframe? I think was the first time we made an investment there. And then we invested in Kaiko a year and a half ago. And in the meantime, we've also had some other investments with our teams in Asia in the last 2 or 3 years as well.
And how do you generally see the perspectives into investing into blockchain technology? It's mentioned on the website in your Q&A session with you that you are actually researching blockchain technologies. So what's your perspective on the developments? Especially now we see more institutionals getting in. So obviously they will need infrastructure for that and so on.
Yeah, look, absolutely. I mean, I think we've obviously been through a pretty prolonged feeling of a crypto winter for the last, gosh, is it now 15 months or so? And yet the good news is, I mean, obviously, the Bitcoin price has held up decently well. I'm still seeing more projects building around ETH and a number of other, of course, other tokens as well. And there's still a consistent number of large institutions who are doing things in the space. And there's still a consistent number of sovereign wealth funds and central banks who are continuing to do more experiments. So, long term, I continue to be very bullish about more adoption at the institutional level. That's even before we talk about the potential benefits of tokenization, especially in capital markets, which I think, again, is a question of when, not if. And that's before now when we talk about things like AI and deep fakes. Could there be more usage of blockchain ledgers as well to help with more authentication in a trustless world? So I think there's a lot of long-term structural elements, both in terms of use cases as well as specifically around institutional need that are going to drive the demand. The question obviously is the when, and this winter. I'd say, whereas previously we would talk about much shorter cycles from when things go down to when the corporates are engaging with serious budgets, I think it's a bit of a mixed message that I'm still hearing in the market now. There's no bank, there's no major financial institution that doesn't keep half an eye on crypto. Most of them are still doing experiments, but when will they commit to go from experiments into really fully moving into the space? That's still a question, how soon we're going to see that picking up meaningfully again.
And what trends do you see in the institutional investments after all these crashes with FTX, Rare Oaks Capital, and so on? Do you see a lot of institutionals still afraid to start even experimenting with crypto and blockchain? Or do you see that they are taking now this opportunity when the market is down?
I think it's a mix. I think the people who were looking for an excuse not to do things that they said they're too busy with their day jobs, they're taking that excuse. And I think the people who are more forward thinking and recognizing the opportunities, and this extends to quite conservative organizations, even like the European Central Bank. They're still experimenting. I think the question actually is, what does this mean in terms of the governance and the structures? Because I think when we then have CeFi exchanges who are not regulated or not sufficiently regulated, I think this has made people nervous. I think also there's a difference between how the Americans are behaving in terms of how they've gone after, obviously, the likes of Binance, but also people like Coinbase. And I think that's an interesting challenge to the community. Does this mean that we can find working DeFi models? Or does it mean that actually we still need to have more in the CeFi, but we need to have more transparency and more regulation? Those are like 180 different points of view, and I hear all of the above. So I think that's something that I don't know whether we would get consensus in the community, or whether we just kind of need to wait to see what the markets and what the regulators, end up wanting to do.
Yeah, the time is needed for that. And you mentioned as well the AI, and I think it's currently now everybody talks about it. Like almost every tech conference is now devoted to AI. So what intersections of AI and fintech do you see? Maybe you can share as well some of your portfolio companies which combine implementation of AI and fintech.
But specifically related to crypto, or
no,
not
just generally. Yeah, not necessarily.
Okay. Yeah. So look, I think the power of AI is just this tremendous step change in productivity and automation of what people do. And that means, so the interesting thing, especially in large financial institutions, is there are still a remarkable number of repetitive tasks which are still human run, or at least human in the loop. And some of these things are, I hate to say, but very, very boring and very, very dull. It's reconciling ledgers. It's going through very detailed data statements. It's fixing issues that happen with semi-manual processes, deep in the plumbing of the organizations. There's also things at the knowledge end, which are very, very manual when you think about it. Producing producing quite repetitive analyses of trends and figures, whether that could be about the economy or about the performance of the financial institutions, or about things related to payments. At both ends of that spectrum, in the middle and back office, as well as the very front office, generative AI, for example, has a tremendous capability. I'm not saying to replace people, but very significantly to augment what they do. And so when I talk to financial institutions about AI, this tends to be where most of the conversations go. How do you make the employees 10x more productive? How do you make the quality of the output that much better at the first time of asking using different AI capabilities? Can you create many more customer-friendly processes, whether that's customer service or account inquiries, etc., that can actually be run now on top of a lot of these, let's call them robots. So there's a lot going on, in that instance. I think further out, there are questions about, could AI be used for investing strategies, finding more signal in all the noise? I think the jury is still out about that. I think when it comes to alternative data and finding signal in the noise about market movements and market sentiment, I think that could be a promising area. I think when it comes to actual investment strategies, there's an interesting thing where, because your investment strategies actually change all the time, because there are so many parts of the market that shifts all the time, actually, especially for things like equities or relatively low liquidity items, for example, crypto, there's actually less data sets to train the AI and build models on than you would think. as opposed to something that's, let's say, much more consistent, like payment data or transaction data. You can use the AI and the ML very effectively there for anomaly detection and spotting patterns. But when your market trading strategy maybe has to change, especially for things like high frequency, has to change, maybe on a weekly or monthly basis. Sometimes some HFT traders tell me even sooner than that. That's very hard to build reliable AI models to adjust to that. You still often need a human touch. Although interestingly, I did the other day meet an Uber driver where he said he only did that as an Uber driver to get out and have fun and meet people. And the rest of the day, he's actually building an AI that he thinks will go against my observation. So I don't know if this guy's listening. I can't remember his name, but if it does work, hats off to him. So let's see. Maybe I'll be wrong on that front.
So I misunderstood. What application of AI does he build?
Yeah. So literally, he's a commodities trader. And he's a high frequency commodities trader, and he's been doing it for about 10 years. And he talks about the game. And he said when he first got into the game, you could have a strategy that would work for like 5-10 days. And you could see from the alternative data and market sentiment, things that would move the market. It's now got to the point that there's so many automated processes that people are trading before the market sentiment kicks in. So they're making a bet, for example, that if there's a statement coming out from the Fed, they don't know what the statement is going to be. How could they? But they know that there will be some movement on the market. And so they're automating the trade in the seconds before the statement comes out. And then they're doubling down after the Fed statement comes out, which way it goes, positive or negative. Effectively, they're trading on the vol. He thinks that he could create a series of different AI algorithms that could help him get much faster to stay ahead of this level of extreme automation that he's seeing. Like I said, let's see. That's just getting to maths and statistics that's well above my IQ. But like I said, fascinating story. So, I hope it works.
Yeah, that sounds interesting. And maybe you can share any specific companies in your portfolio which do something in intersection of AI and fintech?
Yeah. Okay. So one of the companies in our portfolio is on the insurance side. It's a company called Plank. Plank is an Israeli-based company that actually does risk underwriting for commercial insurance. And what they do is they already have a very effective AI engine with multiple different algorithms where, let's say you are underwriting the risk of a restaurant or a bar. Now, there are some generic drivers of risk for a restaurant or a bar, but then there are some specific things. If you're in a good neighborhood or a bad neighborhood, if it looks like you have fans who are more likely to get drunk on a Saturday night and have a fight, or if you're a bar that has more risk of accidents or so on. And they use their AI, a series of image recognition and NLP, and they've just announced that they're now working with GPT-4, from OpenAI to take that to another level, to get a much deeper understanding of the risk that these small businesses might have. And they provide these capabilities B2B, so they sell them to the large insurance carriers in terms of, to support them to help them underwrite risk and make decisions on their customers or on their policies much faster. We have another company in our portfolio called Elios Health that works with automatic transcription for psychiatrists and psychologists. Psychologists, psychiatrists, they derive most of their value by actually speaking to their patients. But there's a lot of paperwork that's needed and a lot of very deep consideration of what you're writing in your reports, especially when it gets into diagnosis, but also reimbursement. So Elios Health, uses AI to automate a big chunk of that middle and back office capability. And I know that's not directly fintech, but it's more on the health tech side. But I talked about reimbursement. I talked about insurance as well. So there is an element of the financial play there also. Let me see. I mean, actually, the list goes on, because we have a number of businesses already that are the intercept between providing a software capability and providing a payments capability, expense management and payments, hotel management software and payments again. So there's a tremendous amount that can be done, also with the AI on these fronts. And then lastly, another company that I work with called Canoe Intelligence. So they're automating the data gathering and the analysis and parsing for investors in private equity firms, venture capital, and real estate funds, and so on. So Canoe Intelligence is the platform it's the market leader, we think, in terms of extracting that data and serving it up to their customers. That's an obvious use case for AI. And the Canoe team are already rolling out a number of new products to provide more commentary and more analysis around the data that they're already pulling with their existing AI capabilities.